Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I am your host, Josh Lilquist. On the last segment, we talked about why the market could be bracing for a potential opportunity. No, was not an impact, opportunity as we see this volatility increase. Talked a little bit about other assets, why you're seeing stocks being talked about all the time, and other institutions, banks, the Buffetts of the world doing options. So just different opportunities that present themselves if you know what is actually available. We talked about the different people that are coming to these investing classes here at the Academy that are looking for something not new, but just a little bit different because they are stuck being in that same cycle, on that hamster wheel, just trying to do the same thing over and over and over again. And we had a lot of people texting in for this investing class that we do here at the Academy. And we do these classes, and they're trading and investing classes. We do them during the week, the weekdays, and the evenings. And these are classes where we've taught thousands, just like you, are different strategies which are designed to teach you to make smarter investing decisions. And they're, first off, they're a good time because people like to learn about new things, but then discussing the opportunities that people have. So just text the word investing to the number 210-210 for 2 seats for this investing class and trading class, or go to investingandtradinglive.com and pick your own date there. So, Al, on this segment here, since we did kind of let the cat out of the bag on the last segment, talked a little bit about stocks and options and just different opportunities that are out there, I want to actually compare and contrast those. Right. So, because I was mentioning that everybody comes to these investing classes and they want to know more about stocks. How do I day trade stocks? And that's what everybody is talking about. Because that's all they see on TV and in the internet. Well, quite frankly, day trading, in my opinion, is a thing of the past. Yeah. It's not something that actually people that know what they're doing are doing every single day because it's not necessary.
Yeah, I think actually that people don't really understand what day trading is. They say they want to be a day trader,
Correct.
But technically, a day trader is someone that buys and sells a stock and doesn't hold it overnight. And
that's
whatever
all it is.
The asset is. You can trade every day, but that doesn't mean that you're technically what we call a day trader. You're just active, and you're taking advantage of opportunities. You mentioned there's a lot of opportunities out there, and those opportunities are in three different directions. It's not just in an up market. The market does not have to just go up for you to benefit. And in fact, we would argue that you might be better off from a return standpoint benefiting in a down market than an up market.
Yeah, it's good because it goes down 3 times faster. Right. So if there's a lot of people that are listening right now that feel like they're behind, well, if you feel like there's the market might drop here in the next 6 months to a year, well, there might be an opportunity to play catch up.
Right.
So to compare and contrast these, Al. So everybody knows what stocks are. There's basically 1-to-1. You buy a stock, you need to put all of your capital in there. It ties up all your capital. Right. You have limitations of time. The market's only open 6.5 hours a day. If you have less than 25 grand, you're restricted to 4 trades per week. So there's challenges with that.
Right.
So let's compare and contrast that with, say, the futures market. Now, the futures market would be like your commodities, gold, oil, silver, lean hogs, when we like to talk about, S&P 500. So what are a couple similarities? No, actually, let's do the differences first. Yeah. What's a little bit of a difference between stock and futures? And then I want to do some similarities as well.
Yeah, well, the primary difference is the amount of money that you have to participate in the two. If you're looking at stocks, look at some of the good companies out there that have had a huge impact on the return of the markets and will continue to. Companies like Apple and Nvidia, Tesla, Netflix. Those are very expensive stocks. I mean, if you want to have a position in something like Apple's trading over 220 a share, I think, and a full position would be 100 shares. That's $22,000. But how many shares of something that costs $200 or maybe $800 or $900 can you afford to buy? If you're only buying 5 or 10 shares or 1 or 2 shares, you're not going to have much of a return there. So how can you participate in the stocks like that or assets like that are high priced? Well, you can use the futures market. That is one market. You can invest in all the major stock markets for a fraction of what it would cost to actually invest in the stocks themselves. You can trade all the major stock markets, all the foreign markets. You mentioned commodities. I mean, commodities give you the opportunity to have a portfolio that's not all that there isn't a correlation between everything. And if you're buying stocks, it doesn't make any difference whether you're buying stocks in the financial market, the technology market, the growth market, value market. When the market crashes, the correlation becomes so high that everything gets sucked down. Good companies with bad companies. But in the commodities market, what happens with lean hogs or sugar or soybeans really has nothing to do with what's happening in the NASDAQ or the S&P 500 or the Dow. So you can have assets that are non-correlated. You can have a small account that controls something maybe worth 20 times that amount or 50 or 100 times that amount. You can also trade almost 24 hours a day. The stock market's only open 6.5 hours. The rest of the world doesn't shut down after our stock market closes. So there's activity going on that can have a huge impact on the opening of the stock market the next day.
Yep.
Futures market only closes for about 15 minutes. So you have the ability to not only participate, but also to have better risk management on a stock portfolio, for example. Okay. You can use futures to, if you want to trade in the stock market, just understanding futures and looking what's happening in the futures market can give you a better understanding of how to invest properly in the stock market.
So there's a lot of differences, or contrast between stock and the futures market. So that's a good thing because there's different things you can do with those. Now, I want to ask you a question here, and then for those of you that are watching the YouTube stream live here or recorded here, this might blow your mind here. And I'm going to ask you this question, Al, and we're going to do this off the cuff here in a live setting here. So you see my screen here, Al, right? This is the stock Tesla. Okay, just take a peek at this screen. Now I want to show you. Let's look at gold, which is a commodity, which is a futures contract. So do you see what are the similarities now? Okay, here's your stock. There's your future contract. Any similarities there?
No. The gold, the chart you have up there now has a nice stair-step move up.
Yep. So the price is different. So that being said, there's no difference there because the price is totally different, but there is a similarity. It was kind of a trick question. A chart is a chart. When you look at a chart, you could I could erase this gold ticker here. Sure. And the Tesla ticker, and you could say, I don't know what it is, but it's a chart. And so it's the similarities, they're traded basically the same way. Yeah. That is true. You should be able to look at a chart and not know what is a chart of and determine whether not only if there is a good investment there, but where is it. The point at which you enter a trade is the most important component of a trade. Exactly. And then what else is important? It's where you're going to exit a trade. So before you even get into it, know where you're going to get out. If you're wrong, get out with a small loss. If you're right, get out with a big profit. And the number one thing, regardless of what you're trading, by the way, especially if you have a retirement account, if you're approaching retirement, the number one most important component is risk management, especially for somebody who's going into retirement. You cannot have worked for maybe 30 or 40 years, maybe giving up some things to put some money aside for retirement, and then all of a sudden have the market take that away from you. And it happened, and it will happen again, but it happened back in the year 2000. A lot of people who thought they were in great shape woke up one morning and saw their assets start to disappear, and over the course of about 2 or 3 years lost 50% or 60% of what they had. Same thing happened in 2007 to 2009. Yep. Those people didn't know that was going to happen. They just weren't prepared for taking advantage of the opposite direction that those markets moved. Correct. So, and the reason why it was kind of a trick question that I asked Al there is because a lot of people think there's a difference between what you're trading. Think of the stock market versus the futures market as two different vehicles. Yep. They both have a gas pedal, they both have a drive, they both have a reverse. So say you're driving your vehicle, and then you say, "Oh, honey, your spouse, your husband or your wife," and you ask, "Hey, can I drive your car tomorrow?" You hop in the same way, you buckle your seatbelt, push the gas pedal, and put it in forward and reverse the same way. Right. So they're just different vehicles. Yep. So that's a great opportunity. Now, the difference in the vehicle is what you're going to use it for. Maybe your spouse has a pickup truck, and maybe your spouse, or maybe you have a sports car.
Let's go Ferrari.
Ferrari, there you go. Two different things. So it depends on what you're going to use it for.
That's right.
That's why you want the right asset based on where you're going to go. It's going to drive the same way.
Yep.
A chart is a chart, and that's why we've been seeing people become more comfortable doing these different assets.
Right.
So if you want to learn more about these assets, simply just come into one of these investing classes that we do right here at the Academy, just by texting the word investing to the number 210-210, and that'll be for 2 seats, one for you and a friend. Text investing to the number 210-210, or go to investingandtradinglive.com, and you can pick your own seat there. We have these classes during the weekdays and on the weekends. Text investing to the number 210-210. We got a lot more to discuss. Make sure to stay tuned. We're going to discuss some more income strategies and retirement strategies coming up next. This is Josh and Al. We will be right back. So we will stay live here on the YouTuber.
So let's do that.
You like how I stumped you there?
No.
I was hoping that you would catch what I was laying down, but I was actually glad that you said that, because then I was able to explain that for our listeners.
Yep. Was it over 1,100 broadcasts, and I got stumped on one question at 1,100.
I might bring that up on the next segment. Well, the YouTube listeners, they got that.
But I was kind of right, because I was looking at
You were right.
the movement of
You didn't know the context of the question,
that's right.
so we call it that.
That's right, yeah.
I like it. All right, we got one more segment to go.
Sort of reminds me of what happens with my wife. No matter what questions you ask me, I'm going to get the answer wrong.
Pretty much, yeah.
Yeah.
And if it's right, it still doesn't matter.
Yeah.
Or it's still wrong. All right, let's get segment 4. Any specific topics you want to talk about?
Yeah. Well, we mentioned risk management, so let's talk about why that's so important now. Why and why doing something different than what Wall Street might be recommending is going to be so important going forward.
Okay. All right. For our YouTubers, here we go. And we will go on to segment 4. 11:40 on the clock. Boy, this computer's slow today. There we go. All right, here we go. Segment 4. All right, here we go. Welcome back to Investing and Trading Live, sponsored by Trading Academy. On the last segment, talked about some strategies and really basically comparing and contrasting the difference and similarities between stocks and futures. Now, a stock is the same thing as a futures contract on a price chart. They look the same. Yes, I did stump Al there. We were actually joking between the segments here, and first time in 1,100 segments, I was able to stump him, and I'm glad I did.
It wasn't really a total stump there. I did kind of get the picture of the two charts is totally different. But you're the reason that you were asking that question was an important one, and I'm glad you did.
Yeah, but I didn't give you the context, so it was a trick question. Normally, you catch those trick questions there, but I did that on purpose because I need to get one up on you today.
Must be getting old.
It's been a long time since I had one up on you because you say I don't look like Brad Pitt, but I think I do.
Well, and that's the important word there is think.
Hey, it's my lie. I tell it how I want, right?
Okay.
Well, anyways. Well, thanks for everybody that have been texting into the investing class that we do here at the Academy that wanted to learn more about the difference between stocks and other assets like commodities. So if you missed tickets for that, just text the word investing to the number 210-210 for 2 seats. That's one for you and a friend. Or go to investingandtradinglive.com and you can pick your own seat there. Also, we appreciate all the followers and subscribers. This podcast is going bananas right now. We're trying to make this the global #1 podcast about the financial markets, simply just go to Investing and Trading Live, wherever you listen to your podcast, Apple Podcasts, iHeartRadio, Spotify. It's actually on about 12, 13 different hosts for podcasts. Some of these I never even heard, but I guess we got a lot of listeners on them. So we appreciate all those followers and listeners. So Al, in this next segment here, something interesting that you brought up in between segments here that I think we should talk about, because I believe it's important. It's a great topic you brought up. Now, markets are at near all-time highs. So if you think about this now, people should be the most wealthy they've ever been. Well, the fact of the matter is they're not. You have inflation, things are getting more expensive. People, even though the market is high, their 401ks, their IRAs, their retirement accounts, they're not following that same trajectory. I think I said that right. Close enough,
trajectory.
Right? There you go, close enough. So, sometimes those are hard words to say, okay? But so they want to do things a little bit differently. So a key component that you talked about, or you want to get into in this segment here, is managing that capital properly. Mm-hmm. So with these markets at all-time highs, why is it so important right now to be able to manage that capital and protect those positions?
Well, when you see a market peaking out like this, very high valuations, right now the indexes appear to be overbought, and oftentimes that's followed by a retracement. There's a number of things that are of concern here. When we talk about managing a portfolio, it's not just managing the risk part of it, it's managing the growth part of it too. You know, a lot of people just kind of accept mediocrity and accept what Wall Street tells them to do. You use that analogy of cars, the different cars. Mm-hmm. You know, if you're going to go off-roading, you're not going to take the Ferrari. And if you are going to be in a race, maybe you want to use the Ferrari instead of...
I found out that it's not a good idea to use my truck to go through the swamp, so I use my Commander, my side-by-side.
Yeah, that's a choice.
I learned that the hard way.
Okay, yeah, we'll talk about that someday.
Yeah.
But Wall Street pretty much has everybody in the same vehicle, even though they might be heading off into different directions. Some people are heading for the swamp, some people are heading for a racetrack. But you can't use the same vehicle. So it really becomes important to understand what is available. And the reason it's so important right now is that there are a lot of things out there. I mean, we know that we don't care what direction the market goes because there's opportunities. But we need to let our listeners know what could be coming down the road. People have become complacent. You know, over the last decade, the average return has been closer to 13%, which is way, way on the high side. Goldman Sachs, pretty reputable company.
I've heard of them.
Yeah, they came out with their latest statement. They expect returns of about 3% annually for the next decade. Well, when you look at the impact of inflation, which is pretty much right there, and then the impact of fees, that doesn't leave you with much. You know, if you look at periods of time where we've had decades like that where people have not done well, from 1937 to 1950, almost 14 years with no returns. 1966 to 1980, about 14 years with no returns. The year 2000 until almost 2014. And they all follow secular bull markets, which we are in now.
So I got to just kind of go against you here a little bit, because I want you to explain to our listeners why it's so important. So I bet a lot of our listeners probably don't remember those things that happened. So they're like, well, it can't happen to me. I mean,
certainly not 1937.
You probably remember that. You were, 25, 30 years old at that time?
Yeah, I was a young lad.
Yeah, you were probably 50 at that time, I think. Anywho, so if they haven't experienced that, it's hard to fathom what it's like. I mean, think about
senior abuse.
Talk to somebody that has had that happen to them, right? So why is it so important to know about it before it happens?
Yeah, because you have to be prepared. These markets move very fast. Right now, the majority of the activity is done with machines, and it's computerized trading. Those computers react instantaneously. They don't sit around and analyze something. All that has already been done. So when we see movements these days, you have to be prepared. You have to have a trade set, either to get into it or get out of it, so you're not taken advantage of by that by the quick movement of these markets these days. There are a number of things out there that point to the fact that we could have a retracement. There's also things that point to the fact that this market could keep going.
Yeah.
Nobody knows for sure. I mean, we could do a full show, a full hour on why the market's going up, a full show on why the market's going to go down.
Well, the markets are basically like the scarecrow. You remember when in The Wizard of Oz, when I believe it was Dorothy and Toto, they were running around the yellow brick road, follow the yellow brick road, and then they go to the
Please
scarecrow.
don't turn your radio off.
And they say, I forget what it was, but it was which way do we go? And the scarecrow says this.
Oh yeah,
It points both ways because the market will go both ways.
Yes, it will, and that's a good thing. By the way, if the market only went one direction, there would be no opportunities there. So going different directions is an opportunity for all of us. And the people that are truly successful are not just one direction traders and investors. They're multi-direction. So if the market goes three different directions and you're only benefiting in one direction, in other words, when it goes up, you're missing out on more than half of the movement in the market when it's going down or when it's going sideways. So that's why one of the reasons that people's 401ks and 403bs or your employer sponsored plans don't do well, because you're not taking advantage of other than just an up market. And also, you made a statement before about how people's retirement accounts aren't doing as well as they should be doing. And one of the reasons is that a good portion of the movement of the market is only a handful of stocks. Back in 2023, it was 7 stocks that drove the market up. If you weren't invested in those stocks, well, your portfolio probably didn't do well. But here's the concern. Now, most people that are in a retirement account have, even if you have mutual funds or ETFs, they're all kind of designed to mimic the S&P 500. With so many people invested in that, basically that index, if the market does start to rotate, if we do go through a major correction or a bear market, everybody's going to head for the exit at one time, which means that's why we have such a quick move down in the markets, because everybody's trying to get out at the same time, which means the prices keep going lower and lower, and they get filled at a lower and lower and lower price.
Yep.
So you have to be prepared to not only not let that happen, but to benefit from that. And if you want to come into one of these 2-hour classes, we'll show you how that can be done. Most people don't know how to benefit in a down market. They're confused about how that can be done, but it can be done, and we'll talk to you about that.
Yeah, that really goes back to the first segment. We talked about the opportunities in the market. And just to clarify, the market is going to go up. It's going to go down.
Sure.
You know it is. But if you're missing out on every possible opportunity, you're only in one direction.
Right.
You have a 1 out of 3 opportunity to reach your financial goals.
And
And that's
if
a terrible opportunity.
Right.
Terrible odds.
Exactly. If you have an advisor, they're benefiting all 3 directions. You're paying fees whether the market goes up, down, or sideways.
Correct.
They've got the best odds.
Yep. And that's why we have these investing classes, just to give you more insight. And I've been hearing a lot of people say, you know what, at least I can sleep better at night knowing what my opportunities are and then being able to take action on them, being able to protect them if I need to, being able to still take advantage of the upside, but protect from the downside, so there's always opportunities. So one last set of tickets for this investing class that we do here at the Academy is simply just text the word investing to the number 210, and that's for 2 seats for this class. You can text in or go to our website, which is investingandtradinglive.com, and you can pick your own seats there. Al, we've had a great discussion here today. Lots of do's, lots of don'ts. Opportunities is the key of this market and protecting your capital. Let's hear today's OTA tip of the week.
Well, this might be a good time to ask yourself this. How are things going for you now? Are you where you thought you would be or where you need to be financially? Or like many, is your plan to think about it or do something later? And is that your plan because you don't know what to do to change things? And what if there is a way that we could help you achieve your short-term income and your long-term wealth goals? Wouldn't taking action to get that help be worth pursuing and pursuing now? At Trading Academy, our goal is to empower people to achieve their why. In other words, your goals or your aspirations. It doesn't take courage to do nothing, by the way, and stay where you are. It takes courage to make a change that's needed to make choices that can help you achieve your finances, your financial goals with confidence. So if this is something that you are interested in, remember, you can't achieve a higher level of anything behaving as a person who got you where you are now.
I like that. That's great. So it comes down to taking action. Text investing to the number 210-210. So a few things to prepare for next week. We have more earnings. Monday, you got Ford, Waste Management. Tuesday, AMD, Google, Chipotle, Snapchat, and Visa. So great volatility that's going to happen with those stocks. So make sure to protect those positions. This is Josh and Al, Investing and Trading Live. How do I end the show?
We'll
Same time.
Same time. Yeah.
So this is Josh and Al, Investing and Trading Live. Same time, same place. Let's try that one more time.
Let's do it one more time.
Same time, same place next week. Until then, retire young, my friends.
Stumped yourself.
Oh, the YouTubers are going to love that one. Let's turn that bad boy off.